and I will let everybody know when it started. All right, here we go. We are live. All right, so now let's go around a little bit. And I'll just go, Dan, in mine, you're first, and then it goes Jim and Corey and Joe. So Dan, start us off.
Yeah, sure. Hi, everyone. My name is Dan Gananshul. My Twitter handle is Selling for Premium. I've known George actually for a couple of years now. Him and I got involved during the whole AMC meme trade. We were in his group, another investing group, and just actually him and I were going back and forth on a particular topic. But that's how I met George, and then through George got involved with Prospero. I was a buy and hold long-term. I guess I should say I still am a buy and hold long-term investor, but I've gotten more recently into selling options and doing that swing trading. So that's what I'm primarily using Prospero for, and that's kind of what I focus on.
All right, Jim, you're next.
Okay, hi. So I'm Jim Klein. I'm from the Chicago area. Let's see. Like him, I was originally a long-term investor, and I still have about maybe half of my portfolio in long-term investments. And then recently, I've been using the Prospero app just for more short-term investments, figure out positioning, that sort of thing. And then I've been using the app since April, and I've found it to be a great help.
I think Corey is next.
Yeah, hello, I'm Corey Arnold. My Twitter handle is I am Corey Arnold. I actually met George through Joe, and I've been working and using the Prospero app since January. And it's funny, I'm the same. So I was a long-term investor, and actually most of my money still is in long-term, actually like index funds, very, very diversified, very boring investor. And I still am to an extent, but the Prospero app has helped me. I have made a few single stock purchases because of the app's recommendations, and they've done really well.
All right, Joe.
Hey everyone, so my name is Joe Wakelin. I run the Financially Savvy or at Fi Savvy page across Twitter and other social media platforms. So I've been in contact with George now. It must be like a year, right? Now I think we were just off the last couple of months back. I think so. It must be about a year now, which
the
is
gray beard here.
Which is crazy. Yeah, that time has flown. But so yeah, George originally reached out to me, I think, because obviously my content centers around like investing and stuff. Predominantly, again, like, you know, I would say probably 100% of my investment portfolio was like long-term investments, but it is of like, you know, it's made up of some funds which probably hold around 60 to 70% of my portfolio, and then the rest is individual stocks. It's kind of like a hobby that became a passion, that became an obsession over time, and researching companies and things. And George's platform, Prospero, just kind of helped me take what I was doing to the next level. So I was always kind of very much like a long-term approach, focusing on the fundamentals of businesses and using that information to make decisions, and then dollar cost averaging over time, so long as fundamentals remained intact, following that kind of age-old method. And then realized pretty quickly from using the app that I could essentially do exactly what I would generally previously advise people not to do, which was time my entries. But it worked, and it worked really well, especially as I got better at kind of deciphering the really easy to understand signals. I've made a few picks similar to Corey along the way, especially in the last 6 months throughout this year, that have enabled me to focus my capital on specific selections within my range of individual stocks that have done better, and avoid putting my money into stocks which I otherwise would have been dollar cost averaging into without Prospero, and didn't, and those stocks haven't done as well. So it's really, really helped me to kind of optimize my strategy in that respect.
All right, John, I think that's the whole panel we've got here. So if you have questions, go for it.
Yeah, so I think one of the questions other people have had is, are you primarily using Prospero for yourself and for your own investment, or are you advising others using the information? Are you part of a family office? And where are you located? We're trying to show that this is a worldwide opportunity, so it would be helpful for everybody to know sort of physically where you are.
All right, let's do the same order we went in before, so it's not confusing. Dan?
Yeah, sure. I am based in San Francisco, California, in the Bay Area. I primarily use Prospero for myself. I do manage a few other accounts for friends and fam, nothing big. But yeah, primarily use Prospero trading for myself.
Okay, yeah. So let's see. I'm in the Chicago area, and I use the Prospero app so I manage funds for myself and also for family and friends, and I use it for that. And I have lots of friends, even though I've told them about the app, because I told them about the app, they'll still reach out to me, just like, are you seeing the same thing I am, or are you interpreting the same way? But my friends have found the app to be a great benefit to them, because I have some friends who, like, they have always managed their own money. They've managed it. They're like, say, 7 years old. They're not just gonna turn over their money to someone now, but they'll still use the app as just an additional piece of research they use when they're deciding whether to buy stocks, sell stocks, or how to position themselves, that sort of thing.
Great.
Yeah, for me, I'm in the Ohio area, so rural Ohio. I use it just for myself primarily. I have recommended it to friends and they've looked at it, but I don't necessarily invest for other people.
Yeah, I use it exclusively for myself. I do have like a Discord group where people kind of join to see my portfolio. And a lot of people in there have also started using the Prospero app and also really like it. And I'm actually based in the UK, so right down south in the UK.
Yeah, and I'd add, John, that it's probably thanks to Joe that we have in our monthly actives in any given month, I'd say we have between 500 and 1,000 UK users. It's our second biggest market after the US.
And Stephen?
Yeah, so I didn't actually introduce myself in the beginning. So I met George through social media, and then I interviewed him on my own channel. And now I'm actually working for Prospero and some of their social media channels. And I just use Prospero personally.
That's great. So is there any one war story or one challenge that Prospero helped you overcome? I know, Joe, you were talking about a couple things that you had been able to explore using Prospero. Is there any one situation where you were kind of challenged and Prospero helped you to see the solution?
Yeah, I mean, kind of like I touched on already. So beginning of this year, obviously, like coming out of the era we dare not speak of 2021, 2022, where the markets were just absolutely pummeling, particularly people like me who are holding a lot of growth and tech stocks. It was getting to a point where I had been dollar cost averaging pretty much across the board and across, the 20 or so stocks I had in my portfolio. And it was getting to the point where I was like, right, I really want to start being, excuse me, a little more selective of what I'm actually buying now, and trying, I would check on like earnings reports and things like that and try and stay up to date so that I could really kind of pick the companies who I felt were stronger and deserved my investment more. But obviously I understand there's more to it than that, right? There's forces moving the markets that you can't always decipher, or can rarely decipher just from how the company's performing, right? If a big institution decides they don't like it for one reason or another, there can be things moving up and down for other reasons. So when George originally reached out to me and I realized that information could all be found essentially within the signals within Prospero, that's the thing that was, I would say, the answer to your question. The challenge that helped me overcome was determining which stocks I should be buying week by week, which I generally tend to buy, like my buying frequency, based on the signals in there. You know, if a stock has got a whole bunch of short pressure against it and it's got high downside breakout and low net option sentiment, I'm not going to be putting a bunch of money into that right now, and you know, unless it's already gone down a bunch, and then I can probably put it in. But if it seems to have been ticking along and then suddenly all of that pressure is on it, I'm not going to go putting money into that, versus a company which has the opposite kind of signals and hasn't yet gone up, right? So it's not always as completely clear cut as that, but generally, like, often it has been as well. Like I said, at the beginning of this year, there was some real clear cut signals, particularly for I know Tesla is one that people talk about a lot, but Mercado Libre, AMD, and I would say, I'm just looking at my portfolio now, actually, DigitalOcean as well, and the Trade Desk were some huge winners for me. And timing my entries, I used Prospero to help me do that.
I have a story that I'll share. So here's a war story. So I sell options, right, as I just mentioned, and I had sold $6 to $8 calls on Square, and this was back a couple of months ago, and Square actually pumped up and was above 68, and I had sold naked calls, so I didn't have a position to cover, so I was going to be out some money, probably potentially take a loss. I'm like, ooh, this is not good. So either I could have rolled the position or just held it, taken the loss and see what happened. But I checked Prospero. I'm like, well, let's see what's going on with Square in the Prospero app. And both net option signal, net option sentiment, downside breakout, well, I should say this, net option sentiment was trending down, downside breakout was trending up, the signal, and then upside breakout was trending down. I'm like, okay, well, those all point to, you know, bearish, right? Like net options is trending down, downside trending up, upside trending down. So I decided, because of that, to hold my position and turn that into a short. So I basically had to pick up the shares at $6 to $8. So I let the call get exercised. And then the next week, Square went down to, I think, like 66 or 65. And then I closed my short position. And so had it not been for Prospero and checking those signals, at least for me, I probably would have rolled the position or taken a loss. But that made me feel a little bit more confident in taking or getting exercised, and then holding the position to then short it. And then I ended up making money on it.
For me, it saves me a lot of time. So, you know, you can go and do all this research on these companies, but if you start with the Prospero app, you actually get, I mean, you get 5 recommendations a day for the shorter term, and then 5 for the longer term on the buy. So for me, I can start with just those 10 stocks and then kind of do my research after the fact. I don't have to just go and, you know, look at all these companies and try to figure it out. So for me, it just saves me a lot of time, because I can, again, the app is very visual. There's not that many signals. So it just makes my life easier. And I actually was one of the fortunate ones. In January, I got into Tesla at like 107. So that was a really good purchase for me. I did sell. I wish I wouldn't have sold as quickly as I did, but I still made a pretty decent return.
I have one too, if you want. So I first talked to George, I think, late March, early April. And at the time, I was in United Health. And it was a long-term hold. But I was thinking of me either like trimming it or just dumping it, because, you know, I had a good year last year, but it hasn't done so hot this year. And the stock was trading about 460. And I was thinking of dumping it then. But I did see, and this is actually before I talked to George, I did see in the net option sentiment and the upside breakout, they're both trending in a positive direction, and it was quickly increasing. And then it turned out over the weekend there is some agreement between some federal health not one of the regulatory organizations and the managed healthcare companies that was favorable to the healthcare companies, and United Health popped 5% that Monday, and then United Health went from like 460 to 530 in mid-April. And then they reported earnings, and into earnings, the sentiment on Prospero is trending downward. And same with the upside breakout. And then sure enough, the United Health went from like 530 back down to 450. Another one too, like Corey was saying, like for me, stocks like Tesla and Meta, after they've gone up 100% in a year, who in their right mind would initiate a substantial position in stock like that when it's had such a big run so quickly? But the app was still showing, for example, for Meta, showing 100% upside break all the time. It shows 100% or 100 net option sentiment. Tesla, a similar story. And the app gave me confidence to make a sizable bet on those stocks as opposed to maybe just dipping my toe in the water. So that's another way I found the app really helped me.
Great. Can I ask what other data sources you use? I mean, are you old school? You get the Wall Street Journal delivered to your house every morning? Do you watch CNBC all day? What else do you do to kind of find out what's going on? Like in the last week, we've had a ton of news with the interest rate being pegged at 22-year high. Over half the S&P 500 are releasing earnings last week or this week. So there's a lot of information coming out. What else do you do to stay on top of it?
For me, I use so Fidelity actually has a lot of research on their site. So I go to their site, look at if I'm investing in funds, I look at some of the returns, some of the expense ratios. Single stocks, they also have a bunch of research there. I also just go to Yahoo Finance. It's pretty simple. I know it's kind of old school as well, but that works.
Yeah, I'm a big fan of Yahoo Finance as well, Corey. It's like where I go for most of the most of the like the financial data, and then if there's anything I want to dig into further, then I'll go specifically to like the company page and look up like 10Qs and things. So yeah, Yahoo Finance I'm a big fan of. Seeking Alpha is always a good one as well. You've just got to try and break through a lot of the noise there because there's a lot of analysts with a lot of varying opinions, and it's easy to find the ones that just agree with yours. But yeah, it's good.
I use quite a bit as a trader, so I'll just take you guys through my entire sort of setup here. So basically, I start with a macro level, right? So I'm looking at just the news to understand, okay, how's the economy doing? How are interest rates doing? I'll look at the advanced decline lines to see, all right, how's market breadth doing? Are people bullish? Are people bearish? Where's that kind of trending? Just anything that gives me an idea on the macro picture, because obviously the macro picture will then affect like shorter term. And then once I do that, then figuring out my trades, like, okay, what do I want to trade? What do I want to get into? Then I'll start looking at, like Seeking Alpha. Joe mentioned that. I use that to give me more. I pay for their subscription and I use their quant model, and that's more to give me like a fundamental picture. Like, okay, how's valuation look like based on this quant model? How's momentum looking? How's growth looking? Profitability, this and that. And then I go even further deeper. So what I'm going to place, and I usually place day or weekly trades. Then I'll look at bar charts, which I use to give me an idea of put call ratios, kind of like where the skew is. And then I use Prospero to help me confirm. So once I've painted my thesis on what kind of trade do I want to get into based on macro perspectives, and then I start looking at micro perspectives to say, okay, where's the stock trending? How's sentiment trending? Like I go to Discord groups as well, just to see like what retail people are talking about and kind of get a gauge as well. Then I use Prospero to help me confirm or disconfirm what I'm looking at in terms of skew. So like if bar chart's saying, hey, this stock has a put call ratio that skews more toward puts, more toward the bearish side. All right, let me go to Prospero to confirm. Does the upside, downside breakout signals and the net option sentiment confirm what bar chart is telling me? And my goal is to, if enough sources of information align, then it gives me like a more confidence in the trade to take the trade. But if there's like discrepancy between a bunch of sources, then I probably just would avoid the trade because like it's like, okay, there's not a clear picture. But yeah, I mean, there's like a lot of sources that I look at every week just to help me get a better picture on trades.
Yeah, so I use a couple too. So I use Prospero is probably like in my top, like one of the three I use to make decisions. So I look at Prospero. I use Zacks. Usually if I could see a stock that's like a 1 or 2 on Zacks and it's rated highly in Prospero, like to me, that's a really good sign. And then another one I like is MarketSmith, which is through Investors Business Daily, but it'll actually have stock screeners that'll show you like how, say, Warren Buffett or William O'Neill, various people would rate a various stock. And if I see agreement among those types, that gives me more confidence. But I would say Prospero has been the most reliable by far. So there's another AI platform that's available to investors that I kind of compared with Prospero, say going back to March. And one thing I just noticed was Prospero was all in Tesla starting like late May, early June, where some of these other AI competitors had Tesla as like a 5 out of 10, where like a hold. But yeah, Prospero has been, I found, very reliable. Just especially the key picks that are in the app, the most like the long-term holds, and then also the upside breakout ones. Those are the ones I really look at. And if I see a stock that's 180 in net option settlement plus upside breakout, I found that to be a very good. It has a very good track record going forward. So
Great. George, more questions from you?
No, I think the one thing that I was going to add is, yeah, I'm hearing a lot of things that I hear generally in terms of being able to use it as a verification source. Making sure it coalesces, being able to save time on ideas, things like that are things that we kind of get to consistently, and I would say are the best use cases. John, I think that this was mainly like, for your mindset and what people, that might potentially want to be looking at us for media opportunities would look at. And to that end, I'm not really sure. But if you don't have more questions, I could certainly come up with some, but I kind of was hoping that you would take the lead here.
No. And I just wanted to see if you had additional, and I think the geography here is really important because media love to cover stories that have global impact or across different sectors. One of our other questions was, we know that the investment community tends to get balkanized or siloed because analysts cover certain sectors. People can be only into healthcare, only into tech or whatever. How does Prospero help you kind of cover the gamut of stocks? And are you focused yourself on any sector, or has Prospero helped you break out of your traditional investment sort of tropes, or have you decided to do new things because of Prospero? That would be helpful for people to hear about.
Yeah, I can take that, or I can go first. So I primarily focus in tech just because I work in tech. But I remember one time when I first started using the app, you know how like it gives you like the 5 biggest potential gainers or the 5 biggest potential losers, like right when you log in. One time I saw that and AMR was on there, and AMR is like a minerals or resources type of company. It's not tech. And I was like, well, this is interesting. I haven't heard about this company, so let me look into it. And I did, and placed a trade on it that went well. So I guess there's my one story to say, yeah, I mean, it's helped me identify some stocks that I probably wouldn't look at. At least it piques my interest to then, take a deeper dive.
Yeah, I was actually going to say the same thing. I mean, I use that recommendation a lot. So I look at the top 5 buys and use that. And it's fine. I can't even think of the company I bought recently. It started with a C. It was not tech, and I'm usually in tech, and I bought it and made a nice gain. I did look it up, but it's fine. It's been a while. It's been 4 to 6 weeks, so I can't remember. But yeah, I mean, those recommendations are very, very helpful. I really start my research just from that list, and then do other things.
yeah, I would
So
say
sorry, that's CELH, I think is what you're thinking of. That's in there often, and like, yeah, it's an
Yeah,
energy
actually, it
drink
wasn't.
company.
No, that was
Oh,
a good one. I missed that one. It was
oh,
Confluence or it
oh,
was something like that.
yeah.
Yeah.
Okay, sorry, Jim, go ahead.
Yeah. So one thing that app's really great for me was it puts stocks on your radar that you would never otherwise hear about. So like Enovix, that's a stock I don't think I ever would have heard about. Like I've seen it in like say Seeking Alpha articles, but I think if it hadn't been for the app, I would just sort of scan through it. It would just sort of fall by the wayside. But when you see the app making recommendations so strongly like it does for Enovix, and then you see other articles out there that sort of paint a similar picture, the app has been very helpful just in putting stocks on my radar that I wouldn't otherwise give, the time of day. And and giving you confidence to sort of make, bets based, on with a certain degree of risk tolerance that you wouldn't otherwise have.
Yeah, not a huge amount to add. I'd echo what everyone said. It's great for bringing stuff to your attention that you'd otherwise not kind of see, because I think it's nice to know that it's coming from I guess like a neutral source as well, right? Because normally when I'm on Seeking Alpha or Yahoo Finance, it's an article that's written by someone who's either particularly bearish or particularly bullish on a kind of stock. So you've got to kind of try to look past that and see what they're missing out. If they're bullish, that may be kind of on the negative side. Whereas on Prospero, you see signals for stocks, and it based on if they're doing particularly well or particularly bad, it brings them to your attention nonetheless. And then you can make kind of a more informed decision to then go and to look into that one further and then build an additional case based on that information, which is helpful.
I think I would agree with Joe, where you never know where the incentives of these finance like news resources are. But with Prospero, all the signals are based on where the money is going. So I think that gives you a really big confidence level.
And that's the thing too, right? Like if you go to a Discord group or whatever and you see what's being talked about, it's already being talked about. So it's already being covered, right? And so you might be kind of late to the party, or I mean, there still might be upside, but Prospero, since it's very data driven and it's coming from sources that aren't readily available to just like the public person to pick off the street. I like it because I don't know. I find it as a way to maybe get ahead of the crowd and potentially position into something before it shoots up or gets big. And if it never shoots up or gets big, then at least I know like, hey, if the data is saying that this is still a good stock, even if the retail public aren't piling into the trade, based on more fundamental factors or based on the data, this still might end up being a good trade. So I don't really care if no one's piling into the trade with me, as long as the stock's doing well, upside breakouts trending up, that options is trending up, then I feel a little bit more confident about it. But I do like it because it also helps me identify things or stocks that may not be popular yet.
Great. We know that with the Robinhood and AMC stories and some of the other younger or next gen sort of investors, you rely on a lot of different sources that go into their CFOs at the public companies that they're working for and say, hey, what's going on with the stock? Why is my equity not growing? And I would think Prospero would be of interest to younger investors, and maybe some thoughts on that, how they could use it, why they should use it, and how they might be tracking on their own investment portfolios, which is often started when they start getting equity in the companies that they work for.
Yeah, I'll go first here. So I think it's a really interesting question, actually, because I think in the last kind of decade, but particularly the last like few years, not only has like retail investing become so much more accessible, particularly for young investors, but it's become popular, right? Partly because of that, but also then because of AMC, et cetera, and what's been going on there. So, and I think Prospero is really important because particularly for those people who don't necessarily fully, maybe haven't started their journey on how to actually effectively research a company or, successfully execute like an options trading strategy that's going to work for them. It's helpful to just look at those signals and then start seeing what the stocks are doing to help try and get their heads around what's moving the markets in the background. And it's been massively helpful for me as well, because before I wasn't fully aware of all of this kind of like the things that drove the signals within Prospero, I mean. So I think from that respect, I think it's incredibly important, the Prospero app, and will be helpful for helping people to determine, how to effectively manage their own portfolios and the strategies that they end up employing, whether those are, trading or long-term holds or short-term trading or whatever it is.
Yeah, for me, I agree with you, Joe. I mean, just thinking about my experience when I was in my early 20s, I didn't have a lot of money, but I wanted to invest. And the thing I got into was penny stocks, which was really dumb. I lost the money. And if I had something like Prospero with the combination of Robinhood or some type of broker where I could have got in for, a few $1,000s, I probably would have had a much better chance of actually getting a return on my money, versus trying to go into those risky stocks. So I think this is, I think, George, you developed this app because you're trying to get, insightful information to the public and to everyday investors. And because of that, I think it could be really helpful to young people. And like Joe said, it's become popular, which is good. People are starting to realize, they need to invest for the future instead of consume all their money. So I think it's definitely a great tool.
Dan, other thoughts? Jim?
Yeah, I mean,
Yeah.
I think it's very good for the younger population. Just it's very friendly to them. So many kids right now on their phones nowadays. The app is very good in that respect. I like to think of the app as almost like a very smart friend. So like think of just imagine you could have like Warren Buffett or something like that whisper in your ear. I mean, like anything, nobody's 100% right, but more often than not, the stocks are going to perform strongly. And, it's a way to help you sort of manage your risk. It's a way to sort of help you minimize losses. And you're going to find out about stocks that you wouldn't otherwise know about. So I think this is a perfect app for a new investor or a younger investor.
Yeah, I would say, I agree with everyone's comments, right? Like, I think it's very helpful. I'll take it from a trader's perspective, because I think most people on here are more, I know we're all kind of long-term to some degree, but just whenever like people ask me, like, how do you analyze your trades? I'm like, hey, you're always looking for layers of edge, whether that's information that no one else has or that's public information out there, but you do a better job of putting all the pieces together to figure out, why this is a good trade to take, right? And I think having this information at your fingertips for younger investors or even seasoned investors or traders, both, right? Just really helps, because the more information you can have to help validate if this is a smart investment to take or smart trade to make, helps. It just helps you feel more confident. It helps, as Jim was saying, de-risk things. It just helps in general. And the cool thing is, like, the information that Prospero is giving, a lot of that information, as I mentioned before, isn't like readily available to the public. And then if it was, you'd have to take a lot of time to manually put it together and figure out, well, how does this all fit? How do we calculate this? And I don't know how to do all that. So the app is super helpful because it's like pieces of information that are helpful, that's already been assessed, analyzed, calculated, that I don't have to do. And I can just quickly look at the app. All right, cool. That's what it's telling me. Perfect. And then move on to the trade or the investment.
Great. George, I think that's a great recap for today. If anybody had some parting thoughts or additional information they'd like to share, we could take that now. But otherwise, I think we're good.
Yeah,
Great.
I'm thankful that you developed it, George, because it is an awesome resource. It does save me a lot of time. It opens me up. I have more opportunities this way because I see a lot more stocks. So thank you.
Yeah, I'm thankful too. So for me, I would say it really helps you manage your emotions. So like last week we saw, like say Anavix was kind of on a roller coaster a little bit, and looking through the data points on the app and hearing George's analysis through the letters, it really helps you put things into context and understand why things are behaving the way they're behaving. And yeah, it's been a tremendous resource.
Yeah, I'm
Yeah,
looking forward to. Oh, good.
Okay.
I was just gonna say I'm looking forward to future features and iterations as the app gets better. I mean, it's been helpful so far already. Yeah, I'm just looking forward to as it grows.
Yeah, I was just going to say that's the thing as well. I don't know how many people are aware, but it gives you literally a live feed throughout the day as well. Like it literally refreshes. I think it's like every 3 minutes, right, George? With the options markets, and that's like the point I was mentioning earlier about how it's almost like an educational tool is to that point, right? You can see what the signals are doing and then see how a particular stock is reacting to those signals, particularly if it's like big moves, and you can see these things happening throughout the day, and it really kind of helps you to understand what's moving these things, and maybe then in the future when you see those same things happening, you're better positioned to then make a decision. So it's given me, I feel like, an advantage that I never had previously. Like it's something I check every single time I'm about to buy a stock.
I think to combine kind of what Corey was saying and what Jim was saying, I actually remember what I was going to do earlier. And I would say, yeah, not only did I build it to make things easier for everyone, but a lot of it was to make my process faster. I was just like, how can I trade better? How can I research faster? How can I coalesce a lot of the information that I got used to doing on my own through a much longer research process? And actually, to what Jim said, I remember what he was saying it earlier. I never had a way, and I'm a trained value investor. I never had a way if a stock went up 100% to determine if the ride was over or if it wasn't. And that was something that Prospero has created for me. When if people come and they say like, oh, it's up, like, do I still invest it? I was just like, hey, if it still has good upside breakout, net option sentiment or whatever, it means the options bets are still live, and it means those guys are still betting on it. So that gives me confidence, and yeah, that's the big thing for me, is that I was exactly in your spot, Jim. And especially like value investing tells you, the more something gets away from kind of like a true value or a market value, or like kind of building the future growth into the stock price, the more afraid of it you're normally supposed to be. But institutions are not staying away from those stocks, and they're not staying away from them because they don't have true value. And like just being able to distinguish what they might be able to be kind of like fed up on and like, okay, now it's time to start shorting them the other way for something that they may be confident and are making, like, even increasing their bets as it goes up. That's just a huge difference. And I'm happy that we all get to benefit from that. And I'm not just guessing like I used to have to, and a lot of people do. All right, awesome, guys. So I think like, yeah, everyone can feel free to jump. For those of you that are here, we're going to do our normally scheduled live stream that Stephen and I normally do. But thanks for coming. I really appreciate you guys being here and talking more about Prospero. I'm sure everybody's going to find that really helpful.
Okay, thank you.
Thank you.
Yeah, thanks
for having us.
everyone.
Thanks, everyone.
Bye.
Right.
All right, let's see. Here we go. Regularly scheduled program.
Just the two of us left. That was crazy. I was battling buses the whole time. I don't know why. There was like a party right outside, so I had to mute. But that was amazing hearing those people talk about their experience with Prospero. And one thing I wanted to mention, while some people are probably still here from watching that, is that it's a free app. So if you want to test it out, it's not a big commitment. You can just download it and like see how you like it, check it here and there, and you'll probably find out that you like it more than, and you'll keep it.
Yeah, no, it's
Up some
amazing
topics.
how some of those, like, how long Joe was like probably one of the first people that I knew that was kind of like an intelligent investor, that had his own process that kind of integrated Prospero into it a long time ago. So yeah, it's so interesting to see like those relationships now lasting a year, because that's really how long this version, what we call V3, has been live. So it's pretty cool, especially as we start to move into V4, the as I call them, the graybeards of group V3, hanging out and getting better with it. And I think that that's the really cool thing, and I tell everybody about it. It's like the more you get to know the signals, the more people seem to benefit from them. And that's a really cool thing to see, especially those people that have come that that have really integrated it into their daily process.
Yeah, and if you've been around a year, chances are that it's probably going to be a part of your process for the rest of your investing career because you like it enough to keep it. So we have a few topics, but there is actually a question. Maybe we should get to that before we jump into the topics.
Yeah,
So
go for it.
I see Mario asked, does the net option sentiment analyze weekly options? Want to know to get an idea of the time frame.
So it actually there's some complexity in net option sentiment, but it doesn't analyze, it analyzes expirations that are less than 6 months. So it's kind of putting that all together. And the reason that I do that much is because, especially institutions, like it's really only, I would say, less savvy traders that use short to expire options. A lot of institutions, even if they're going to buy an option and they're planning to hold it for a week, they still will probably use 90 days to expiration, maybe 120, maybe more, because they don't want what's called theta decay, which is basically you losing the time value of the option. And the closer you get to expiration, the more that time value loss occurs. So that's why for net option sentiment, we isolate those kind of shorter term ones, but we look at them kind of very similarly. And what we're looking for within that is we're looking for, like, we don't necessarily care as much about, say, an option sweep order, like a big options trade from an institution, because to us, that is what they want you to know. They know exactly when they place that sweep order that the market's going to see it. And sometimes that could be just as much to signal that they want you to see it as it is to actually make a trade and profit. Like, obviously, if they're in that big of a trade, they have some idea of the speculation. But obviously, there's always two sides to a trade, and there could be someone selling just as many who has who has the exact opposite view of the trade. And that's something that's always very important to realize in any of these big things, that there very well could be two smart institutions on either side that have different views. And I always like to remind myself of that. But yeah, what we look for in net option sentiment is more what maybe they don't want you to see, and more of like the consistency of price movements across different shorter term expirations. That is what we zero in on to get you that one simplified number. But yeah, definitely a week is in there. It's just not anymore. We don't view it as any more important as 2 weeks to expiration or a month. It is more important in the sense that if there are more transactions, and they typically are more transactions within that expiration, so that could potentially have a much bigger impact on the sentiment if most of the transactions are concentrated to that, especially if it doesn't have as many expirations. But yeah, we'd like to take a wider view, especially because when you get shorter to expiration, you tend to have a lot more retail playing in that space. And that's why when you look at like also upside breakout and downside breakout, if you are, obviously those use, among other things, longer term options expirations, but those tend to be, clearer institutional signals, because, I would say especially there, for when someone's buying up a lot of long-term options, they think the stock is going to go up. There's not a lot of games. There's not a lot of games to that, and they expect to hold those options for a relatively long time, not on a short price movement. So that's why we view those things very differently.
Yeah, so there you go, Mario. That should hopefully cover it for you. Hopefully you're still here. And so I wanted to talk about, now that we have some of the mega cap tech earnings, and we covered how we thought they were going to do last week, but it seems like a lot of Goldilocks reports, right? I mean, these companies are just amazingly strong.
Yeah, I think we saw that close to 80%, maybe it's 7, I think it was 80% have beaten earnings, like, overall. So it is a very positive earnings season. Like the economy showed surprisingly strong. We're getting more talk of the soft landing. And yeah, obviously that's something that, we've really observed with, like, Meta and how we look at Google as well. Meta is something that, for people that have followed along with me, I even looked at and I disregarded for a little while before I started taking our predictions seriously, because I had the same judgments of a lot of people about Meta. But, we've held, I had some people that were asking me if they should hold through earnings because it's already gone on such a run. And I said, yes. I said, there's the signals suggest that the bets are still there and people are expecting positive earnings. And, I think people forget, like, Meta is a massive company and everybody's like, so many people have like written on their gravestones so many times, whether it's like, oh, like Snapchat's gonna kill them, Instagram's gonna kill them until they bought Instagram, and then it was TikTok, and now Reels are doing better. Where it's just like, no company is without without risk. But if you look at it like compare, say, Apple, and we talk about this all the time. Apple and Microsoft were trading at, this was a week ago, 32, 33 times forward PE. Then you had Meta at something like 25, and you had Google at something like 22. And we would talk up Google and Meta on here, and we said things like, "Don't count Google out of AI." And they just had good earnings, and we'd say things like, "You're underrating Meta as a business." And I think it's so important for investors to look at things like that, because that is how their earnings were forecasted, and they were still trading at a discount just because those businesses had like fallen out of favor a little bit to like a new darling like Microsoft. But people sometimes forget that these big businesses, they're not stuck in the sand. And if you look at something like Apple, like, yeah, Apple's got super cool products and they have a great audience. But if you're talking about like growth, Meta has more growth potential than Apple, because so many more people are getting computers and they're going into new countries and internet is going in new places. And so, it is the big social network, and obviously there's other ones, but it's just a business that has a lot of room to grow. They do have some VR stuff, both them and Apple, but they're coming at it in different ways. So yeah, I think those companies both had great earnings. People were saying if they had great earnings, it would move the market. Something that we've talked about in our newsletters is their ad revenues look solid. Obviously, a lot of people are betting on AI. I said you can't have cloud without AI, and that's really important. One of the reasons, we like a company like Confluent and have kept it in our portfolio, even with like iffy price action, because like cloud and AI are intertwined, and especially if you're bringing interesting AI technology along with a cloud business. That is, that's a really, really good spot to be in. And yeah, I think people just like, America has actually done really well. They were a little slow to start cutting rates, but we're in great shape relative to other countries where we are actually starting to get like real legitimate inflation, disinflation behavior, as well as a healthy economy. And I think that's what's causing such optimism in the stock market, that we all thought that, it was going to be a lot more difficult in terms of like lowering rates and or raising rates and having it, really hurt the economy. But we haven't really seen that. We've seen things go well, and that's a pretty exciting, I would say, prospect. There's still that credit crisis looming that we talk about a lot. That is, obviously always kind of on my mind a little bit. But the economy is looking, the American economy seems to have weathered this storm, this inflation storm, this, whether it's COVID spending and the impact, we seem to have weathered it as well as any.
Yeah, well, the Fed did decide to raise rates last week, and I think the market pretty much expected that. But it's amazing, to your point, that the market has gone up so much in the face of the Fed continuing to raise rates, and Jerome Powell kind of left the door open for them to raise rates again in the future. So how much of the success in the economy, like, is the Fed, are we still fighting the Fed by the market going up and the economy doing so well?
Oh wow! I was actually looking. Well, I'll comment on this first. I was just pulling up the probabilities, and actually, like, for the next three meetings, it was a 100% probability of hike. And actually, I guess with these economic numbers, now we're looking at 20% probability of hike, 33% probability of hike for the next two meetings. That's a drastic change. And that could explain, like, the very bullish end to the week, those numbers basically being priced in to the market. But yeah, I mean, I would say overall that we're just like, the big problem with rate increases is that, and we've talked about this, but it's never hurts to review, is when rates get higher, the returns of, I would say, especially, let's say, growth stocks become much less appealing from a risk rewards perspective, because those are the stocks that really get hurt in rising rate environments anyway. So not only are you saying the probability that these growth stocks will hit is lower because there's less appetite for them, these, more conservative investments become more attractive as they're, risk-free or low risk returns get relatively higher. But what we're seeing now is, even as rates go up or have gone up, and those kind of like higher, safer investments, and they are safer, are looking more attractive, we are basically seeing too much excitement in growth stocks, too much excitement in AI and tech overall, that they're just like, that 8, 9, even 10% fixed income instrument that's lower risk is not looking as attractive as, these tech stocks that people might miss the bottom on, that they might miss the big growth opportunity on. So that's just a very interesting supply and demand situation there, where it's just like demand doesn't typically exist for tech stocks in this fashion in rising rate environments. But I think people kind of see the end is coming, and that's part of it. And they have seen the end is coming because of the inflation results. And then you just kind of have like, I think a lot of it was retail that actually started to pile back into these stocks. And then they're basically like, trains leaving the station, whether or not we get on these growth stocks. So we've seen that money that was in fixed income start to flow back in into these growth stocks. And like, yeah, there might be ups and downs. But the EMAs on the market they've turned. They've turned, they typically are slanting down and they've turned around, and that's a hard ship to steer without a major event. We talked about wars and things like that, and it's not without risk. But you look at it, everything that we're talking about are all known factors, like this credit crunch, like everybody knows it's coming. So like those EMAs are shifting. Exponential moving averages, for those people that don't know, and I'm not a big technical person, unless the technical kind of agrees with what I'm already seeing, that essentially increases my conviction. And I'm seeing a lot of turnaround in tech stocks, a lot more appetite for growth stocks. I'm seeing the Prospero metrics look better for growth stocks, especially in the long-term options markets. And that behavior is being confirmed by these, exponential moving average movements, and them kind of like, hitting the bottom of their curve and curving back up. So yeah, I would say that it's going to take probably like a major news event to turn the overall direction of the market. There will definitely be corrections. I know some smart people saying there's going to be a correction in August. But yeah, this is people generally seem to agree that this is going to be a bull market now.
Yeah, so we talk about our Fed and how it impacts the markets, and obviously it drives the markets a lot. But wait, let me look at this article. I want to get this right when I say this. So the Bank of Japan announced on Friday that they were going to loosen its yield curve control, which I was reading that it was a shock to the markets. And my main question for you with that, what I wanted to ask you is, how much do you think the global, the Feds around the world, the global people affect the USA stock market? Do you think it has a big impact? And then how much do you think USA affects those countries around the world? What our Fed does?
So I would say there's some of it that is just about macro forces, right? Like people are not going to be as, look at the UK that's having more problems with inflation, and you just talk about like, where their instruments are going to go, and like this basically like this talk of risk that we talk about, just looking at that, like there's some things about their economic situation that is just like out of our control, different from ours, they're not on top of that. So that's going to be something that, like, we'll do it in the first place. Like, if we go in and say like, oh, our rates, things like that, that's not going to necessarily affect what's going on with their capital markets as much. What that we're more on top of things, and I would say definitely in terms of them, the only thing it might do is it might increase their allocation to, American stocks, because their policy is their policy. But at the same time, like, they could see the same things, and this really goes for any country. If they start to see our growth stocks turning around, there's a lot of people that become more interested around the world because they know, like, American businesses, especially new American tech, if you can get it on the ground floor, those have been some of like the better, the better public company value appreciations that you can have access to, especially because of America's ability to expand abroad, right? You don't necessarily have, TikTok being like the huge counterexample. So I would say China, this is starting to happen more, but like before that, you don't typically have like Chinese technology company like starting to go around the globe. Like, yeah, you have like goods, like plenty of goods manufacturing, that kind of thing, or something like Foxconn manufacturing like cell phones for Apple, but you don't necessarily have the major brands that the US has that just use globalization to full effect. And obviously the list goes on, whether it's fast food, blah, 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 et cetera. There's so many international American brands. And that is, if we have a healthy growth sector, that is going to attract dollars. And that is one of the reasons why we talked about many times that, like, the US government is very favorable towards Wall Street. Both political parties are, because like that is our best way to get dollars into the country. And a lot of what attracts dollars into the country for those growth stocks is also a reason why people like American real estate and international dollars flow into American real estate, because we are viewed as a high, I would say, a risk mitigated economy, even in our situation, because of our ability to innovate and the ability to say, oh, maybe some of these companies come and go. Maybe the federal government, like a lot of federal governments, is a bit disorganized and has other problems, but America continues to generate innovation, continues to generate big business. And that's something that, like, obviously when we talk about, tech and growth and money in the economy, it can make people feel comfortable that, in New York, in San Francisco, like real estate values are going to stay high, because even if some companies go out of business, there'll be new companies that emerge and that are making money, and they're going to continue to prop up those real estate markets. Where when you start to go into other countries that don't have the same history of innovation, there could be risk in some countries, like dying, globalization occurring, stealing some of their businesses and basically their economy shrinking, and that damaging the real estate prices. But yeah, I would say that there are some impacts in terms of like something like Japan's decision, in terms of like how international currencies are looked at, in terms of people's macro models, how they're going to adjust some of their allocations, and that happens kind of around the world. But it's not a huge impact unless what they're announcing is a much bigger deal. Like I would say something like, a large market like the UK. If they're also starting to get on top of inflation, but if they have a terrible inflation reading, that might have like ripple effects on a lot of international markets, just because that is a big source of capital. And if they're pulling their money out of their markets and putting it in like kind of safer, higher interest investment, that has that kind of has a supply and demand effect on the world's investments. So there's things like that. And Japan is a big market, obviously, for that, and a decent size in terms of just like total capital. But I would say that particular event is not big enough to alter our markets or a lot of markets, that much. Maybe something a little closer. Like I don't even know how, just to use an example, like I don't even know, say, how closely like Japan and Korea's markets are, how many kind of companies are listed on both or anything like that. That would be an interesting question to have. But in this example, it's possible because they're very close to each other and they're smaller markets that news from those economies can affect more, just as I'm saying, like, because the UK is so close to us, if they had some bigger bad news, that could ripple into us. And it would certainly, if we have bad news, that ripples around the world. Just like if China has bad news, I would say that ripples around the world more than anything. But we are big enough that if everything's fine in the US market, Chinese stocks can take a hit, and that won't necessarily like affect our market tremendously, unless it's something like them getting COVID first and their market starting and everybody's like, oh, like come here next. That is obviously an example of something actually physically rippling out that will obviously ripple out in the markets. But yeah, if you're just talking about like general lack of demand or less GDP growth in China or something like that, like that will affect the companies that are in China, as well as our companies, US companies that rely on the Chinese markets. That will impact their forecasts, and we do see that. But it's not enough if it's just kind of demand problems for them or even supply of dollars to invest in their markets, to that in and of itself to affect our markets. And that's the biggest one. The rest of them are, I would say, even less important.
Yeah, that's super interesting to know. It seems like the world is so globalized nowadays that, but I guess when the USA is so big, it's like we're the biggest of them all. So everybody else follows us. But we have some very interesting earnings to talk about. I don't know, which one do you want to start with, SoFi or Palantir?
Oh, did Palantir actually report? I think it's just
Oh, I think, they didn't report yet.
it's just going crazy.
Oh, okay.
Yeah. It's just like, yeah, we could talk about both because both are very interesting. But yeah, SoFi is one where, it's the same thing with like PayPal. There's a lot of like, we had PayPal and Square and SoFi, they were all like starting to pop in Prospero. And that's one that's like so interesting and like part of like what we were talking about earlier in like our like how to use Prospero, how does it help? Like me on my own, I'm not really looking at those stocks that closely, like because I'm thinking about this credit crunch and I'm not really knowing how much that's going to potentially affect or the risks. But that's the counter example. You look at these companies, and obviously SoFi, the big story is college loans are going to start flowing a lot more again, and they have a huge exposure to that. So that's an obvious reason for them. That also makes any kind of intervention risky. But let's just talk about SoFi and PayPal and Square. For example, and SoFi, obviously our signals really turned around on them, and we talked about that maybe a month ago, and it's been really good since then. So we'll probably maybe have to cut it a little callback to that. But yeah, like that turning around is very impactful, and that's one of the reasons we make the signals the way we do. Because like honestly, like if PayPal and Square and SoFi, if these were the only companies I covered, I could keep detailed models on them. I could forecast like their revenues and how much potential defaulting or certain default assumptions would affect that revenue. I could do that, but that would take a lot of time. And I couldn't cover any of the rest of the stocks. It would take a lot of my time. But that's why we use that, because when I see things like PayPal and Square and SoFi all start to recover, all start to have much more long-term options bets coming in, and short-term ones, they're all looking pretty good in net option sentiment. That means the people that have done the work are basically saying these got hammered too hard. Yeah, they might have some credit problems coming in, but they got undervalued based on the economy, general economic concerns, as well as I would say that however they're modeling that credit crisis in, they're going to say, oh yeah, this is going to come, it's going to rear its ugly head, and we don't know what's going on in the economy. But I would say what happened is the economy started to recover before the credit crisis, and people were just basically probably saying like, yeah, that might harm, or before a credit crisis, we don't know. So they're saying, yeah, that might harm these stocks, but not enough that not enough that I still want to stay away from it.
Now, I have a really interesting hypothesis that I've had myself, and I just want to bounce it off you to see what you think of it. So, technology has innovated in all these sectors, and it seems like the winner of each sector becomes bigger than anyone previously thought. So, you have Tesla, which is a massive car company, Apple with phones, you have Uber as a taxi company, Airbnb, the list goes on. Could one of these fintech companies get a majority of the financial system to the extent where they become like one of the biggest companies in the world, or even a legacy bank? Could they do it as well? But do you think the financial sector will have like a winner that is that big from technology?
The financial sector. Well, I mean, I think Prospero, obviously. Well, no, but like to be a little less tongue in cheek, like we talk about this all the time, and I'll talk about it again, where it's just like one thing that I do really respect Amazon for, and like, yeah, it's like soulless, blah, blah, all that stuff. We all know like the way they treat their employees is not good. However, like a lot of that was built on doing crazy good things for their customers. And Jeff Bezos, like in all of the early meetings for Amazon, essentially had I don't know how long they continued this, but he had a customer in a seat, and the executives would have to like talk to the customer. And basically he would have them make sure that the business was pitched to them. And if you look at Amazon from a customer perspective, I'm not sure a lot of people know the history behind Prime, but he had no idea he could do that. He just started like, there was no precedent for that. He just started promising the pricing, like the promising the shipping and doing his very best to like hit those targets, and eventually built the infrastructure. And it wasn't really on time, but that's the thing. It was so much better than we had ever experienced in anything else that like, yeah, even if it wasn't like 2 days every time. And I certainly had some things that were late, and I still have some things that are late, but it's still like worlds better than any other like product delivery system. And he did put the customer first, and returns are really easy, and there's all this stuff. That is all to say, I would say, and like, if you look at Apple and you look at like, maybe not the battery life thing, which is weird, but a lot of it is just like making it easier. And I would say ways they put the customer first is like, they're really good at securing data. Like there's the big story about like Meta surrendering data in like an abortion case of like, someone in North Dakota, where it was just like, whatever on the case, people can have whatever opinion on it they want. But I'm pissed off that they surrendered that data, like that person's personal data on essentially what is just like a suspicion. And it's just like, even if it wasn't, like, I don't think that like carries the mark of like, if it's like national security, if it's like a major crime, if it's just like, yeah, like I think data should be subpoenaed. But if it's like personal data otherwise, that is all to say, Apple is really good at protecting people's data. And that is one of the reasons I use an Apple phone more than anything else, because like I'm not necessarily worried about any of my data getting out, but I want to support a company that behaves in that way over one that doesn't. And obviously we talk about Meta a lot. It is what it is. I would hope that they behave better. And like I think that's actually an interesting thing to touch on, where it's just like, and I've gotten asked this before about like ESG or whatever, and I was just like, I think there's investing to make money, and then there's like ESG and everything. And I was just like, I think you separate those things. And like, yeah, I'm not trying to give Meta any dollars that I don't have to. I think we all vote for our dollars. But if their stock's gonna go up, like a lot of people want to like hurt Wall Street or hurt companies or whatever. And like I always just say, well, if you want to hurt Wall Street, the best thing you can do is make money, make successful trades. Like not like, whatever revolution you think you're involved in or whatever, just make good trades. That's how you hurt Wall Street. Profits for you. But yeah, I would say that Apple puts their customers first, and Tesla has done a really interesting job of doing that too, where it's not only, their cars are easy to use and they're adding features that like other people don't have. I've seen some people like come for Elon Musk and Tesla and just be like, go for Elon Musk, not my Tesla. I love it. Like it has all these things that I like. And some people were just like on, and it's kind of actually echoes exactly what I was saying with Prime. Like I actually saw one of my friends posts on Facebook that was like, yeah, he lied about the battery life and they were supposed to get more than this. And like a bunch of our friends were like, whatever, it was like better than anything else we could buy. And like, we love our Teslas. Like, like I don't need to stand up for Elon Musk, but like, I think those are really good examples of just like putting the customer first. And I just don't think that exists in fintech. And that is what Prospero is trying to do. And whether it's us or someone else, just like a good experience for a customer in terms of just like actually thinking about their needs and making a product that really, like, I would say gives them things they didn't know that they wanted. And I think that's what I kind of identified. Like, you're solving problems that people don't even know they have, instead of, I would say, the general approach to fintech, which is just like, we're going to solve like some small pain point, or maybe a larger pain point. And some people like Robinhood lie about solving that pain point, or like pass the cost on somewhere else. But it's just like, yeah, I think that that's something that if someone does it, and look at PayPal, like, what are they really doing? Like, they're making it a little easier. Like, yeah, like they're doing something nice, but it's like, it's not in the same capacity of like what we're talking about, which is like solving problems that people didn't know they have. Like, they solved an existing problem that everyone was aware of, and like pretty well. But yeah, I think that's in the zone that we're trying to get. And yes, there could be a fintech that's that big, but like the only way things get that big, I would say, are customers that love the product. And I just don't think there's many like Robinhood was like that. People loved the product. Like, that was the closest thing I've seen. But they loved an idea of a product. The real product, when they actually found out what it was not a very good product for them. But like, that's what's missing. They could have been that if it was actually really what they said. And so that's why I use that example, because we intend to do that. And whoever does that, there is that potential for big growth, massive growth. But it does have to really deliver on the promise of being a product that actually really helps people. And I haven't seen that yet. Helps people and like that specific thing. Solves problems that they didn't know that they had.
Yeah, that makes sense. It's all about the product, and that's the only way that it's going to expand to a wide enough audience where so many people are going to need to use it that a company could grow that big. And a company that's product is, very safe and it's in the people's best interests, and, it's not creepy at all what they do. How about Palantir? I know I mentioned them before, but they're going crazy. I don't know why. Maybe you can explain it to me.
I know, and I always kind of joke about how like I was like, I don't know, people like hate Meta so much, but like they seem comfortable with Palantir, and like, make your money, whatever. Like Palantir is, but that's like Palantir is like Big Brother as it gets. Like Meta like might be selling some of your data or like whatever. Palantir is like literally like joining data sets for the government to help them spy on everybody and like catch people, and like they like, the big story about Palantir is like, and for anyone that may not like Google and what they're doing in AI, like Google, like I think it was like 6 months ago, dropped a major mysterious like Department of Defense contract, and like because they were like, we don't like what's going on here, and then Palantir picked it up the next day. So yeah, like I think everybody just like realizes like Palantir is like, they have solved problems that other people have not. In terms of how to work with, I would say, especially government agencies, like just getting those infrastructures, those relationships, like you can pitch them on more projects once you're already in there. They do the same kind of thing as major companies. They're very good at like organizing disparate data sets, leveraging existing technology, and then essentially doing a lot of consulting on top of that. And they built a great organization to do that. And I think people are just like realizing that there's some things in AI that are going to take time. And like ChatGPT starting to decline, we've talked about that, and had their first month of decline, and users all, that's a good example. But I would say Palantir's got a real business in AI, and they've got interesting technology. They've got a lot of great relationships. They show good growth. Obviously, we see good options bets on them. We see a lot of, profitability plus growth, which is what we talked about. And yeah, like I don't particularly love their business and what they do, but it is a great business, and something that is like a legit pure, I would say almost pure AI play. Like some of what they do is consulting, some of what they do is database work, whatever. But at the end of the day, they're explicitly pitching advanced tech, predictive analytics, that kind of thing. They will make an impact in a lot of industries, and that's I think that's another thing about it that makes it easy for them to sell, and why I would be bullish on them long term, and why I think a lot of people are bullish on them long term, because they see there's like real meat to the business. It's just like once you're cleared to work with the government, nobody really has to worry about like, okay, I have sensitive information, on this, because like very few, if any, are going to be as like fastidious about that as the US government. So it's very easy for them to pitch into places, get certain projects, that kind of thing. So yeah, it's a really good business. I mean, I think there's been some various news events that are just basically like, oh, like Palantir is building a real business. I think that like, is a major thing. But yeah, they haven't even reported earnings yet. And I think a lot of this is people expecting them to have a very good earnings report, and they should. I'll tell you, all these people are calling me up and being like, hey, I'm doing something in AI. Like, I know you've been doing it for a while. It's like a hot thing. And a lot of people want to talk to me more than they ever did. And like, you could just imagine like Palantir, that is like a much bigger entity established with major projects. They're probably their phone is probably ringing off the hook to do these projects now. So yeah, I would expect them to just be, that's a great long-term hold.
Do you think their bigger moat is their technology or their relationships with these governments around the world? Like, what would be harder for a competitor to replicate?
So one thing that we say about, I think they're one and the same. One thing that we say about Prospero's tech and why it works so well is that we've been doing tough problems for 12 years on various, like, making various predictions. And they've been at it like, maybe like bigger problems than we've worked on, in terms of some of the government data sets. And like, that's the thing. There is no automated solution. You talk to like anyone who's very serious about computer science, AI, any of these things, there's no automated solution currently that you can just unveil, put it on a project, and it's going to do better than the incumbent on a project. It takes work. And so the technology, I actually think automating the problem solving is the most important thing. Like, oh, we have this kind of format of data. We've seen a project like this. We know how to ingest this now because it's like some ancient format. Like, that was one. We actually had a fixed width data set we were given instead of like a CSV at one point. And it wasn't the first time we got a fixed width data set, but the next time we were prepared for that. And I think that's a really good example of just like encountering problems in terms of how they need to be approached to create a good predictive pipeline, which I would say is separate from setting up different algorithms. That's the value.
Mm-hmm. Okay, so I want to move on to our last topic of the day, which is kind of just a little funny, quick topic. But so I don't know about how much of our audience knows the person Logan Paul. He's a pretty popular YouTuber, social media personality. He's in the WWE. He's fought Floyd Mayweather. So he's got a big audience, and he started a drink called Prime, which is actually eating into the businesses of big companies like PepsiCo, Coca-Cola, all these Monster Energy, all these people who are in the energy drink space. And Chuck Schumer, who I think he's the head of the Democratic Party right now, he's got a very high position, came out last week and said that they're going to investigate the drink for like bad tactics or bad marketing and yada, yada, yada. And I wanted to ask you, like, do you think these big companies are able to have that much of a relationship with the government where once their products are being threatened by a smaller up and comer, that they're able to like just create some drama for it so it doesn't grow as fast?
That story is as old as time. Yeah. I think that I wish there was more of the reverse, where it was like big businesses and like the government like looking at them. But, unfortunately, for reasons that we've talked about on this many times, it's just like, it doesn't really work like that. It works the opposite way, where like larger companies are donating the dollars. They like have the attention of the government. And yeah, I mean, I will say this, like, energy drinks are not necessarily great for people. And like, but, but like the difference between like one energy drink and the other one and the health properties, not significant. Like, is it theoretically possible? And hey, don't get me wrong. If they investigate the energy drink and find out there's some ingredients in it that are different than other energy drinks and
Let me tell you,
actually are more harmful,
this is what they're actual investigating. They sell a non-energy drink that's just like a Gatorade, and they said they look too, I think, similar. So they're not even like the ingredients aren't even the thing. It's the marketing of the drink.
yeah, it's like it's a witch hunt probably. Like, you know, I'm giving them the benefit of the doubt that I would say like if they do find something like that, like then you know it will have been time well spent, question mark. But like if it's just like if it's just like it seems like they are just making someone pay a tax for and you know and you know what it likely is, like I hate to be so skeptical, but it does tend to be like this, where it's just like what happens is then his energy drink company starts making political donations, and then you know that's the way to make the investigation go away.
Otherwise, what? Does like a small company get crushed if they don't have the funds to do that?
It seems like it's big enough that it won't get crushed. Like it's just like it's just a pain, you know, and you have to go through things and like
Wait for the
I
government
mean,
to make money.
yeah, exactly. It's a takedown. You know, it's like when you know the local mafia guy shows up at your bakery and it's just like, oh, I would hate for something to happen to this nice energy drink company. You know, you guys are doing so well. You have such a fine establishment. You know, I think it's that. Like, and I think for them, it's just like, well, these old energy drink companies are giving us money. We got to make sure we get it from the new ones too. So I think that's what it is for them more than anything. And unfortunately, like when we've talked about this, that's just the way our political system works. You know, these people need don't like it runs on money. They need donations to win their, you know, so it's not even like, and I've said this, it's not even really their fault. It's just the way like now this is the structure that works. And it's like, and for them, if it's just like, hey, we have these current energy drink companies making money and like giving some to us, and this new one is not, like they're gonna be hostile. The one that more hostile to the one that isn't giving them money versus the one that is, because that's the practical reality about their, you know, economic health. It shouldn't be that way. It is. And you know, the hope is like the good news is I don't think his energy good company is public, right?
No, yeah.
Is it? Yeah, the good news is like it's harder to affect sales of that than it is if like this announcement was made, it was a public company and it could actually really affect the company. I think that's the good news. But yeah, it's just like one of those things where this happens all the time. And it even happens amongst like, you know, I always think it's funny, like, you know, things like the tobacco lobby and like the vaping laws that got passed, where it's like it was definitely like the tobacco laws, like tobacco companies like making it more difficult for like kids to buy vapes or certain kinds or like whatever. There's no doubt that was them. But it's just like so funny sitting from their hypocritical spot of being like, oh, like, yeah, like we're worried. We're worried about like these kids and buying the vapes.
Right.
Like, meanwhile, like for like years, they're like making cool Camel selling like they're to like sell teenagers cigarettes. So they're just like, oh yeah, we got to make sure these vapes are safe for the kids. But you know, that's what happens. The businesses with money, like, but I would say like the US is bathed in like businesses that like go through those growing pains. They face like whatever, like the incumbents want to make it harder for them. Like, you know, nobody wanted electric car. Nobody in this country wanted electric cars to exist. Nobody wanted solar to become as big as has become. So like sometimes building a new business in America means like facing off against things like oil subsidies and you know, the government maybe making it harder in certain situations to roll it out or easier for the incumbents or, you know, whatever it may be. Like, you know, that's just, you got to be prepared. You got to be prepared if you want to start a new business that is going to take money out of the hands of existing businesses, as well as, you know, also potentially taking money out of the hands of those government associations that take money from those existing businesses. Yeah, like those people are not going to take it lying down. And I think, you know, ultimately and unfortunately, like you got to build that in your process. If you want to grow as a product in America, you have to be prepared to grease the right palms.
Mm-hmm. Yeah, it's like, I guess it's natural selection. And if I had to predict, I'd say Prime gets big enough and then one of the companies buys them. That's like probably what's going to happen. And then they'll just incorporate them.
Yep. And like, and some of what happens on that's kind of funny on that note too, is basically like, what you see is them being like, them approaching the acquisition or being like, oh, well, you know, probably going to be expensive for you to pay for all this government litigation that we started against you. So we'll take care of it. It won't be a problem. Your company will be able to reach its height. That does happen all the time. But yeah, it's just a question of, I don't know what he wants from his energy drink company. You know, it's very possible that that's all he wants and he wants to sell it. There's plenty of people that are just like, they want to go and they want to sell it and they want to start the new one. So maybe this starts the process of him just like getting off and out of this investment into the next one. Who knows? You never know what people want, but it is fair to expect you start anything new in this country and it's like disrupting old businesses. You know, if anybody's more curious about how that works, watch the Uber story. I think it's on Showtime or whatever, and it's like really interesting where it's just like, man, they faced a lot. And, you know, unfortunately, it created kind of like you might call it an interesting work culture that is just like basically like the general like tech policy that we do not subscribe to, which is like, I think it's move fast and break shit, which was what they were doing. But like, yeah, sometimes like that actually worked. And so many businesses had come along to try and like disrupt cabs. And like, yeah, sometimes like it actually just takes someone that's willing to play a similar aggressive and like, you know, working your contacts kind of business. And that's just what it takes sometimes. You know, that's a cost of doing business. And any business that grows to be big, I would say, is going to have the right connections everywhere, not just in business.
Yep. And that'll take us to the end of our topics today. It was an amazing Prospero weekly update. It was great hearing from all those investors. If you're someone watching now and you tuned in late, I would just go back to the beginning and hear some of the stories of how people love using the Prospero app. And yeah, that's about it, George.
Awesome. Yeah, it's that. Thanks for hanging out the whole time. I know this was a longer one, but I think it's going to be a really good one. Thanks.
Yep. All right. We'll see you guys next week and see you next week.